The likes of Nikkei and Kospi, they are doing well in trade today.
On inflation, it is too soon to say whether the recent readings represent more than just a bump.
Don't expect any changes in rates or stance just yet.
I mean, the range shifts to 22,640 to 22,830. That's the broad range.
Retail disbursements are up more than 33% YOY.
We are starting at, new highs. 22,554 is what the start is at, 120 points higher.
There are cycles and then there are counter cycles which is happening, which in my view is a little bit of a risk for earnings going forward.
The Nifty has tripled from those levels after it crossed 22,533 this morning.
The Nifty and the sensex are sluggish. They're in the red, not by a whole lot, just down about 0.25%. Board will consider issuing equity or convertible securities amounting to 2,075 crore.
Markets have recovered quite a bit from the lows.
Well, the markets have recovered, and I think markets have bought the dip once again. It's an incredible session once again. This is Closing Bell. We're coming to you from the CNBC-TV18 Motilal Oswal studios. The next 1 hour of markets. I'm Prashant. With me, my colleagues Reema and Surabhi here, and Nigel is joining us from the newsroom floor. Guys, hi, good afternoon.
Good afternoon. I'm going to jump at it and say it first because we don't get to say it very often. Banks are leading the rally. Now, I don't remember the last time we made that statement, right?
I mean,
I don't remember the last. I don't remember the last time I said HDFC Bank is the top gainer, contributing the most to the Nifty's rally, contributing the most towards the Nifty Bank, and the big boy has come into form, and that's good news, and that explains why we're still holding up.
Reema, your IT is also doing well.
IT's joined the party, right? So I think that's what's changed in the last 2 hours is that Nifty IT is now at the day's high.
Yeah.
So it's recovered quite a bit. It was in the red, now it's up.
It's private banks and it's IT. So, it's by the dip, right? That mantra is well and alive. And the market, by the way, is recovered from the day's low. It's recovered very strongly. I think it's about I think the low was 22,300. Now, we've come off a little bit from the high, but it's nice and it's a very nice pullback, really. From the 11 a.m. low, right? That was the second dip which came. The market's recovered 200 points from that level. Bank Nifty is higher. It's up about 1%. Largely, I think you should say a big thank you to HDFC Bank, but a few others as well. And of course, IT services is the other part of the market, which is holding up things very well. There's an exclusive story flashing at the bottom of the screen, which we will get to in just a bit from now. It's a long-running saga, but maybe it's in this closing chapters now. But guys.
Well, the Nifty's recovered close to about 250 points from the day's low. The day's low today was 22,300 to be precise, and now we're at 22,550. So it's been a good 250-point recovery from the lows. Now, banks have been doing well from, the word go. From morning, we've got the banking index up close to about 0.5%, courtesy HDFC Bank, and that continues to drive the gains. But IT, as we said, has joined the party. So names like Tech Mahindra, TCS, LTI Mindtree, Wipro, these are stocks with gains of 1.5% to 2%. That's Nifty IT for you. In the morning, Nifty IT was down, and now it's up 1.5%. So, the change that's taken place is courtesy many of these, IT names. And perhaps the view is that maybe in the second half of the year, at least, things are not looking so bad. And the correction that we've seen in the last 1 month may price in the near-term disappointment related to earnings.
And it's always about are we at the bottom? I think that's been the consistent debate with IT. It started somewhere, last quarter, and it continues. And I guess that's the punt, so to speak, or that's the call that the market's trying to make, that if you're at the bottom, this is the worst, buy here, and it gets better from here on, right?
No, absolutely. I think there is consensus that we are at the bottom, maybe December, maybe, the March quarter. It's just the pace of recovery, right? Does it come in June or does it come in the December quarter? I think the pace and the extent of the uptick from the bottom is what the street is watching.
Absolutely, and that's the next event that the market will look out for. The current one actually is more from the BFSI space, which is the policy tomorrow. And today, actually, quite a bunch of BFSI stocks are up and about. We'll, of course, talk more about HDFC Bank, and that deposit number is something that the market has really liked, the deposit mobilization. But even others, a lot of small finance bank stocks, for instance, they are up and about. If you look at Suryodaya Small Finance Bank, that's been up 9-10% right from the morning. AU Small Finance Bank is having a decent session. RBL Bank reported a very strong growth in terms of deposits once again. It's more about deposit mobilization than the growth in advances this quarter, because that's where the fight is. And a lot of these banks, the ones on your screen, they seem to have done a decent job. So that's one active side of the market. Beyond that, some more names on the mid-cap screen. Mid-caps are not outperforming large caps today for a change, but individual names are always out there. So Aster DM now 9% higher. is one that pops up. 5% up on Scient. We were just talking about IT. That's up and about. So quite a few of the movers and shakers over here. Zomato, by the way, has been quite smart as well. Let's just pull up Zomato. Yeah, still 3.5% on the higher side. So plenty of action in the broader markets. The advance decline ratio has improved. Just pull up the lines now. You've got over 1,400 stocks advancing. So the green line is once again above the red line. So not too bad in the broader markets. Nigel?
Well, that's right. So it'll be the piece that you spoke about on HDFC Bank. The deposit growth has been appreciated. So we'll address the fundamental part of that news, but we'll also address the technical part of the news. Whether or not the FI ownership has come down enough for it to get an added weight on the MSCI. So we'll address that data point as well in the next 5 to 10 minutes or so. But besides the IT names that moved to the high point of the day, Asian Paints as well has seen a big up move. The stock is now up close to around 2.5%. And bulk of that move has come in the last 60 to around 90 minutes. So Asian Paints may be, in fact, post the recent underperformance, that one's putting its hand in there and getting counted. How do you address trade, though? Final 60 minutes coming up. Mitesh Thakkar is back with us. Well, Mitesh, we started off in style. Then we saw a sharp intraday dip. But that dip got bought into yet again. Your view?
So, in fact, that dip, kind of did shake us out because some positions were taken out given the fact that we kind of opened above the 22,530 level and then started trading below it. So we had pruned a long position, but these kind of things happen in volatility. But the most important part here is that the bank nifty looks the stronger of the two indices in the short term, despite the fact that it's the nifty which has given the breakout above the earlier highs. The chart structure for a lot of banking names, which enjoy a good weight in the bank nifty, like HDFC Bank, Axis Bank, ICICI Bank, is quite positive. So maybe we are leaning slightly towards the financial side. In fact, for the time being, while we were just talking about HDFC Bank being the biggest gainer, one of the biggest gainers in the index today, I think the other stocks over here also, look very good. And I would recommend a buy on Axis Bank with the disclaimer that you recommend it to our clients. Axis Bank is a buy with a stop at about 1,050 and look for targets of about 1,100. 3 to about 1105 on the upside over here. And the other one is City Union Bank. It's been a recommendation earlier. It's kind of slightly come off from the day's high, but keeping a stop below 150, I would suggest a long for targets of 160.
Okay. Mitesh, we'll come back to you for more perspective, more ideas in a bit from now. But let's focus on that story which was flashing at the bottom of the screen, right? This is Jaypee Associates, the flagship company, which of course has been, undergoing, it's been troubled for a while in the NCLT, but they could perhaps be a ray of hope. So on the latest in terms of trying to resolve the debt now involved, and this is all, of course, what we're learning from sources, NARCL is looking to acquire the company's debt from banks. Ritu is here. She's got details on this story. Ritu, afternoon.
Good afternoon, Prashant. It's been 7 years and counting for the Jaypee Associate debt resolution, and now it seems there's some movement on that front, with the lenders this week receiving a binding offer from the National Asset Reconstruction Company to acquire the debt from banks. Now, we've been given to understand that earlier this week, NARCL made an offer of nearly 10,000 crores to acquire the entire debt that banks currently hold for Jaypee Associates. But of course, at the moment, given that there's RBI's directions that stand, which has told banks to take the company for resolution under the Insolvency and Bankruptcy Code, the lenders would require the Reserve Bank of India not to proceed with this. We're also given to understand that if NARCL's offer, which is currently under evaluation by banks, is accepted, the process is such that they would have to invite counter bids under a Swiss challenge method. And, if there are no other counter bids, of course, it'll be NARCL's bid that is accepted, or otherwise we'll have to see how that proceeds. But at this stage, it is still being evaluated. But the offer is binding in nature, is what we've been given to understand. In terms of recovery for lenders, now, given that this account has been default for a long period of time, banks have fully provided for it. So anything that comes in terms of an offer from NARCL, which as an ARC would require about 20% as upfront cash payment, and the remaining in the form of security receipts, would count as recovery for these lenders that are involved. There are 22 large banks that have exposure to Jaypee Associates. ICICI Bank, State Bank of India, and IDBI Bank are some of the key ones.
Okay, all right, Ritu, thanks a lot for joining in and giving us that exclusive story. But let's turn our attention to HDFC Bank. The fundamental news with regard to their operational update we'll get to in just a bit. But the MSCI angle, that's something that we'll be focusing on. in the last 90 minutes, 60 minutes actually or so, we did get the shareholding pattern. And out there, the FI holding has come down. And that's why, in fact, it's opened up some part of a headroom in terms of foreign ownership. But has it reduced by enough? To help us out with that analysis, Sriram Velayudan, the Vice President, Alternate Research at IFL Securities, joins us. Hi, Sriram, and thanks a lot for joining in. It must be very, very busy. You must be getting a lot of calls as well. But we're just doing some rough math with them. And it appears, yes, the FI ownership has come down, but it's not fallen by enough. And that's why it could miss out on that weight increase from the MSCI. You give us your first thoughts.
Sure, Najib. Hi. So the March quarter shareholding was released a few minutes back. Interestingly, the room has opened up. All this while, if one looks at the flows and all, it was evident that FPIs have been seller in this name. The room has opened up till 24.95%, which is short of 5 basis points, basis the methodology for an weight increase. Now, what I would like to highlight is we have to be cognizant of the fact that when the stock got added post-merger, despite of the stock having a room of above 15% at 17.5 it was, the index provider had used an adjustment factor of half because they wanted to avoid the risk of reverse turnover. Correct. Though it should have had an adjustment factor of 1, for avoiding the risk of reverse turnover, they used half as the adjustment factor. So we will have to wait for clarity from the index provider because it entails a very big churn. And like you know, the index providers are quite sensitive to the churn value in the stock. It will entail almost an inflow of $3 billion. But basis the methodology, it isn't fulfilling the condition. It fell short by 5 basis points.
All right, Sriram, just to ask you a counter question, as you have detailed that to us, the number is coming at around 24.95%. It should have been at around 25%, and that's how that 5 basis points is the miss.
Correct.
But, you know, so now it's at the discretion of the index, of the MSCI. Have they made an exception in the past? That's point number one. And do you think this time around as well, that could be a possible exception that they make? What is your take? Take us through history first and your expectation.
Largely, Nigel, there hasn't been any exception. We have to be cognizant of this fact. But like you know, we haven't come across a big churn statistics as well. As I said, under the pretext of avoiding reverse turnover. So what I mean by reverse turnover is, let's say, if I start with an adjustment factor of 1, and if it would have led to almost 2.5, 3 billion buying by the FPIs, then again they would have been compelled to reduce the adjustment factor. Correct? Because basis the methodology, now if one goes back into the methodology for treating the adjustment factors, it should have been 1 in place of half, as it had the foreign room of about 15%. Correct. So in this case, it just fell short by 5 basis points, and we have a big churn inflow event as such. Correct. So basically, if you look at the quantum of the churn that the weight up entails, you never know. MSCI might take a subjective call. But as I said, basis the methodology, it is not fulfilling the condition. And the final call lies with the index providers.
All right, Sriram, great explanation, and thank you very much for joining us, in a very timely way to help our viewers understand some of what may happen. I mean, MSCI, of course, as you guys have been saying, will have to take a call. By the way, did you guys see Samir Arora's tweet on this?
Yeah.
I wanted to put this up, but we don't have it ready. He said, it was, of course, a slightly, Samir being Samir, but he said, if lots of foreign investors have sold lots of HDFC Bank in the recent quarter, then lots of foreign investors will have to buy lots of HDFC Bank in the
So therefore, the weight increase is possible.
So the room has to open up. But of course, this is in jest and... but funny. Well, Devin Choksi is with us, Managing Director at DR Choksi FinServ. Devin, good to have you with us here. Thanks very much for joining us. First of all, Devin, quick word on what we are seeing in, actually the indication, not MSCI, but the indication from HDFC Bank, the business updates that banks, etc. have put out. Deposit growth seems to be pretty healthy.
Yes, Prashant, good afternoon. Indeed, I think with around 25% kind of a growth that you are seeing in the deposits, I think this is probably one of the best that one can possibly ask for in the coming period. I believe that I think the fundamentals of the bank are remaining completely in shape. If you look at the loan portfolios also, I think the retail loan portfolio, corporate loan portfolio, and other commercial portfolios, along with the housing finance portfolio. I guess I think the growth has been, I think, reasonably smart in each of these categories in this particular quarter. Maybe you can partly attribute it to the March factor, wherein I think they have got sizably high amount of deposits because of the money coming into the bank accounts. But more or less, I think the advances growth also is suggesting that the bank is already 25 lakh crore AUM now. And I think that's where probably I think my eyes would get trained hereafter. That should this bank continue to grow at a healthy space, then possibility of, I think, 4.5 year time, doubling the size, I think is distinctly possible. And that's where I think one can keep an eye on. Maybe the second area where one can keep an eye on is, I think, how smartly they integrate the fintech platform at the front end for acquiring the customers on the retail side particularly, and also at the same time, I think, processing loan effectively. If these two areas are taken care of properly, I believe that I think this bank looks reasonably promising. Current price to book value also remains, I think, on a comparatively lower side, if I have to put it this way. That can possibly give you the upside possibilities also at the same time.
Deven, is there a risk that margins continue to remain under pressure even in Q4 because of how aggressive banks and BFCs have been to mobilize, the deposits? Given that race for deposit mobilization, do you think it's going to come in at an increased cost and margins could negatively surprise?
Not much. I think 10 basis point kind of an impact which may come because of the high cost of the fund in the deposit that I think these banks are currently experiencing. But on the other side, on the lending side, with the book expanding, I think they are in a position to pass over this cost. Maybe in a particular quarter, I think where the asset liability adjustment is taking place, mismatch is getting neutralized. Till that point of time, you might see some impact into the profits of the company. But I don't think it's much. I think on a size of the balance sheet, I don't think that it will create a big indent or impact at the same time in a particular quarter's result.
Okay, so those are, of course, all the financials that are in focus today. Deven, great to have you on the show. Thank you so much for joining in. Speaking about quarterly updates, the other one that the street is talking about today, of course, is Dmart, Avenue Supermart, right? The numbers seem to be doing well and they're adding more stores. But what's your sense? Because this has been one of the bigger disappointing stocks, right? From just a price action point of view. Oh, okay. I don't think we have Deven immediately. I think we've just lost that link. So we'll go back to it. But I was just checking. Dmart is it still retaining most of its gains? Yes, it is. 3.5% up. So it's holding on after what was a pretty favorable quarterly update for Q4. So that's one stock that's in focus. Otherwise, markets kind of cruising along. Along with HDFC Bank, you have some more names. Titan, by the way, is doing really well. By the way, Prashant, do you know gold prices are at 70,000 Indian rupees?
And plus tax. Remember what Manisha told us? Exactly. If you go to buy, it's 70,000 plus tax.
Do you
have any thoughts?
I think both of you spent some money buying gold recently.
We've just spent some time listening to Manisha with awe and wonder.
And we're just glad we don't have to buy anymore. So, Nigel and Prashant, this question is to both of you. Gold price at 70,000.
Now I applied for the sovereign gold bonds and I continue to hold it, and I go on increasing my holding every time as well. So I didn't miss out on anything. No, my wife is not very, very happy because she didn't get the physical gold.
God,
but
really?
I am part of this. I remember I had actually put out a piece on our digital platforms as well, that yes, the markets are hot, but some exposure to gold. I'm happy I listened to Manisha ma'am, listened to myself as well, and it's good.
He's done the prudent thing. He's done the digital way of buying gold, and SGPs, of course, are a great option. I mean, I think there's absolute consensus on that.
And 2.5% yield as well will be coming in.
Nigel, what?
But I don't know if Navneet is listening. That's for another time.
What is this yield on business? Yeah? You got to feel the stuff. You got to take it out of the cupboard once in a while.
You're just feeling bad that you're not. You don't have those notional gains.
No, but in all seriousness, just to tell our viewers, 2.5% yield. You don't have any problem of checking whether it's in your cupboard or not, and you have a locker and it's tax free after that. So I'm happy, Prashant, you missed out, but I'm sure you have plenty of gold.
Actually, I being a Mallu, I've never bought gold. So
it's just passed on from one generation to another generation. It's passed on.
But I think we'll take a quick break. We've gone on about gold, and but it's of course at a new all-time high. It's a fantastic rally that we've seen in gold. Vinay Jaisingh is also going to be with us when we return. He's, of course, Managing Director, Portfolio Management Services at JM Financial Services. The conversation on the other side. Stay with us.
Welcome back. 22,560 on the Nifty. It's 128 points higher. The sensex is cruising along. It's a gain of about 500 points on the sensex. Till yesterday, it felt like markets were just consolidating. The Nifty was in a range. But with today's up move, the Nifty is up 1% this week. The Midcap index is up 3.6% this week, and the small cap index is a gain of 6.4% this week. So very quietly, the small cap index has been, outperforming every single day, and it's a 6.4% gain for the small cap index. In terms of the big movers, sectorally, well, metals is a star performer. Metal index is up 5.5% in the first 4 days. PSUs continue to rally hard. The PSU index is up close to about 4%. On the way down, it's only the FMCG index, which is a bit subdued, and that's down 0.5%. We're talking about the week-to-date gains so far. UPL is another stock which is on our radar, as sources say. UPL plans a launch of its seeds business, Vedanta, in early FY25. I think Vivek is now with us to fill us in with the details. Vivek.
Well, that's right. Like you mentioned, what we are picking up from our sources that, there could be some value unlock exercises underway as far as UPL is concerned. We understand from our sources that the company is planning to launch the IPO of its seeds business. Now, remember, with the earlier restructuring that the company had done, both the global as well as the domestic seed business is now under the entity known as Vedanta Enterprises. We understand that this IPO could be launched as soon as early FY25 itself. We also understand that the bankers have already been appointed for this particular issue. So BofA Securities, Morgan Stanley and JM Financial are the bankers for the issue. We understand that UPL is looking to divest close to 10 to 12% stake in this particular platform and in this particular company via the primary market offering. We also understand that the valuation that the company is targeting is close to $4 billion just for this particular business. In terms of a benchmark for the valuation, remember, KKR had invested 13.3%, at valuation of close to 2.25 in this particular company back in September 2023. So that is a valuation benchmark. We understand that the company now is looking for a valuation of close to $4 billion. We understand that the entire proceeds that will be taken by UPL will be used to go ahead and deleverage its balance sheet, which currently the company is struggling with, given the fact that it's most likely going to go ahead and miss its guidance that it had given for debt reduction by the end of FY24. So remember, the company had a debt of close to $3.7 billion at the end of December 2023. The company had a rights issue which was planned, which has been a little bit delayed, and the company had targeted to reduce its net debt to close to $2.5 billion by March 2024. So on account of that, this particular exercise becomes quite important for the company in order to deleverage its balance sheet.
And debt has been the big problem, right, for UPL and the rating action, etc. All of that over the last couple of months or so. Vinay Jaisingh, Vivek, thank you very much for that story. Vivek Jaisingh is with us, Managing Director, Portfolio Management Services at JM Financial Services. Vinay, good to have you with us here. You've liked the specialty chemical space. We've spoken about that in the past. I don't think you have. I think you had stocks like Archean in your portfolio and maybe a few others. UPL, I'm not so sure, but if you've heard the story and if you want to offer any comments there.
So we do not own UPL. We are a little wary of companies which have a high debt. The higher for longer interest rate syndrome, which is happening in the world, is something which we believe in. So we avoid highly levered companies. Having said that, obviously what UPL is trying to do is reduce its debt. So, as a company, it's doing the right thing. But, we are avoiding this stock for now.
I know IT has been an avoid for you, but increasingly the view is emerging that maybe IT earnings have bottomed out, and at some point of time, 1, 2, 3 quarters down the line, we will see a recovery. But from here on, maybe the downside is limited. Are you in that camp? Have you started looking at stocks outside of Cyient, Axis Cades? I know those were some of your, IT stocks, but have you added on to, your tech portfolio?
Well, not really. We really believe that US's slowdown is here to come. Wait for the next quarter and you'll hear more negative news than positive. If you just see the last week and see the 10-year and 2-year chart of US, both of them, as far as interest rates are concerned, have gone up by 10 to 15 basis points. You're hearing more and more news that, interest rates are not going to be cut in US for a long period of time. Earlier, people had expectations of it being cut in March, April, May. Now that could go, as much as July, August, September. So what that means is there is pain, which would come up in US. The debt in US is just mounting up. The US global debt is north of $34 trillion. The GDP growth is less than the debt growth. So that tells you that there could be pain coming in. And I think that's the reason why, these highly liquid, though well valued, as you rightly said, they're close to the bottom names. We are looking at it virtually every day, but we don't plan to nibble on it currently. We're happy of buying the ER&D names, which have at least a 15 to 20% plus growth. The names you mentioned, both Axis CAD and Cyient, have a 25, 30 and 20% growth respectively on the top line and a similar growth on the bottom line. So we are better off buying, the higher growth stories where we know that both defense and airlines is giving them good contracts.
Okay, all right, got it. So those are some of the IT names and IT themes. Vinay, great to have you on the show today. So I want to talk to you about the sector of the day. And finally, it's large private banks that are leading from the front, and HDFC Bank is seeing plenty of green. But, the question is, A, just tell us about your stance and how you're positioned. And B, whenever FIIs come and they start buying the index and then bank stocks go up, that we know. But I think what I'm trying to understand is what could cause a pivot of domestic money, maybe a bit of a sector rotation, because this is a trade that's been waiting to take off for a very long time. Could it be, good deposit growth this quarter? What's that metric that could perhaps trigger the churn in domestic money towards large cap banks?
So, just before we reach, the trigger for domestic money going to large cap banks, let's see the reason why they haven't gone. And if you look at what's happened in the last year for even FIIs, out of the $25 billion which has flown into the country, interestingly, the biggest sector which is gained is not financials, it's capital goods. As much as $5 to $5.5 billion has gone there. A little similar number has gone to the financial space. Now that as compared to a weightage in the index of 30% is clearly much lower. And I think the reason is if you're expecting interest rates to fall in the longer term, let's say 6 months, 9 months down the line, and you're seeing, though the loan book is very, very strong, as you saw in the results or the company data which came out, be it of HDFC or a couple of other names, 20% average number, which is very interesting. Valuations are interesting, but you're seeing deposit growths also increase. The cost of deposits also move up. And that means that, NIMs could get squeezed a little bit. And more importantly, when, interest rates fall down, people will have to mark their loan book or part of their loan book to the repo rate, which means you'll see a yield coming down. You add that to the corporate growth. Today retail India is growing the loan book. Tomorrow, a couple of months forward, when you see the loan book being grown by the corporate India, you'll start seeing margins further go down. So yes, the quality of Indian large cap banks are very solid. Valuations are good. But I think the high growth years are behind them. And now you're looking at 10 to 15% growth on a year-end basis for the large caps. So you would buy them as stable compounders, but you won't go overweight them. And that's exactly what our stance is.
Okay, all right. Hi, Vinay. Good afternoon and good to see you in. I recall, a few quarters ago, you all were bang on You all picked up Midcap Cement and you all got in at very, very low levels. If I remember correctly, Orient Cement was one stock that you all got in as well, and the stock more than doubled from there. But the last quarter has been a little bit sketchy for all cement companies. And obviously, when there is a bit of a tussle, the smaller ones get hammered even more. So how are you all positioned out there right now? Because from your buy price, well, you all will be way in the money. But what do you do from now? Some of those stocks have come off 20, 25, 30% as well. So your take on mid-cap cement, and now will you all go with the large cap names?
Right. So this is an interesting space. So overall, we use a barbell approach wherein, in at least in NDPM's portfolio, we have over a 50% weightage in small and mid cap and about 40% plus in large cap, and cash being, part of the other thing. So as you rightly said, Mukund, our analyst, got Orient Cement very, very well. Hats off to him. His point was at 5 times EV EBITDA, this stock can go up by 50%, and he went right. Having said that, we also had two other reasons why the mid-cap space did well. One was the prices of coal that was coming down, which meant margins would do well, inventories would go down, which meant margins would do well, and price would go up of cement because of the demand. All of these alluded to better margins, which have happened. But I think when you're looking forward in the cement sector, especially in this quarter, you're actually seeing exactly the opposite. You're seeing the prices of cement have corrected by 3-4%. You've seen coal prices being largely constant, which means that margins could be under pressure. So I think the best of heydays for the cement sector is behind you, but demand growth is going to be robust. So incrementally, the way we are looking at it, it is time to look at large caps over mid caps as we look at cement currently.
You like Telecom, you like the entire Make in India play. What manufacturing? What about a stock like Tejas Networks? It's been a big multi-bagger. Have you analyzed it, and is it a part of your portfolio? If it's not, if it is, why? If it's not, why?
Sure. See, the way we look at Telecom really is, are you looking at India speaking a lot more? Are you looking at data usage being a lot more? Are you looking at the advantages to have the power to increase your ARPUs and hence, get more pie from the subscriber? And I think all those answers come up in, happens to be a large cap stock, but in Bharti Airtel. So technically that's where we are focused on. If you look at, the company's ARPUs on a 1 year basis, it's gone up by 10%. You look at the overall subscribers, they've gone up by 4%. So technically, if you just multiply the two, you'll see a 13 to 15% top line growth. Yes, there is an Africa problem, but on the longer term, you're seeing incrementally the company being FCF positive due to the deleveraging story. So that's really a simple reason why we like Telecom. When you look at telecom infrastructure, and that's where I think other companies come in, including the names you mentioned, what we see here, there is a lot of squeeze in margins which happen, and you got to depend a lot more on government. So if you're playing the Make in India story, let's play the story where you have a story where you're replacing global products, like let's say defense or even railways, where you're playing the domestic growth story. Companies like Tejas Network, at least currently based on our thesis, doesn't fit into either of the two plays. And we see more attractive companies both in the manufacturing / Make in India or the telecom part, which is why we haven't bought that stock.
Got it. All right. Vinay, what about consumer? Now, again, consumer, it's been the same trends continuing for well over a year, right? Discretionary is doing well, whether that is, premium real estate or, you have names like Titan, which are doing really well. And then there are staples, which is kind of fallen by the wayside. I guess similar reasons. You mentioned growth concerns for banks. And then I was thinking, staples aren't giving you anything, just about mid-single digit. So do you see that piece changing at all? And how are you approaching it? What do you like in consumer?
So, consumer is one space where, again, our analyst Anirudh has got it very right. The big issue was the demand overall is not growing as well as expected. So if you were to talk about quarterly results, that's one space which last quarter got the advantage of margin improvement because commodity prices went down, but you didn't see volume growth happen as well as you wanted it to. Apart from a few companies like, let's say, Varun Beverages, which is gaining from, just marriages and, parties happening, or companies like, hotel industry where you're seeing so much of tourism go up, or even jewelry. You all spoke about gold a little earlier. Gold jewelry is increasing. Apart from these spaces, we are not really looking at the consumer space anywhere else. Maybe another one more name would be a company like a Bikaji, food space again, which is fast moving consumer, where you really buy it, eat it, and incrementally increase your consumption spend out there. But apart from these spaces, the usual consumer names or staples, we think the growth is lacking. Valuations are still not compelling. Yes, they are high rows. Maybe they're like the IT sector, close to the bottom. But when we are looking at India, we are looking at growth in earnings and growth in the market caps. That's where we have a question mark, and we're not touching them.
Vinay, thank you very much for joining in, and we look forward to chatting with you very soon. Need to get into a short break on that note. On the other side, we'll get you a check on what dealing rooms are saying in our segment T Street Chatter. We get you a few BTST calls from our technical experts.
Welcome back. Well, the markets have slipped a little bit from the top, though we're still holding comfortably at around 22,500. If you want a data point, well, the Midcap index has moved into the red. Well, it's that point of the day, though, where we get to D Street Chatter. Nimesh joins us. Well, Nimesh, a bit of a switcheroo today. Yeah. Normally, we've been seeing that the mid and the small caps are outperforming. Today, you have the large cap names led by big boy HDFC Bank that's outperforming. Tell us more.
So, again, good recovery in the markets, right? We were down 100 points. That we've recovered very sharply from that, and largely led by the large caps. Of course, HDFC Bank is helping, but in general, there is a tilt towards the large caps in today's market. The flow seems to be mixed. That's the overall feedback. But again, as you remember, I said yesterday as well that the flows are largely in the financial names, and that continues in today's market as well. Even yesterday, the feedback was it's largely driven in the private bank stock. So that trend continues in today's market as well. And thankfully, a lot of the updates from the financial companies have been pretty strong. So that's helping the financial stocks as well. I guess from a trigger point of view, all eyes will be, of course, on the credit policy tomorrow. It's largely going to be a status quo, so no big change there. But I guess earnings season, which is going to be long earnings season, that's going to be a big trigger to watch out for. I guess from a sector point of view, some bit of profit booking is seen in the OMC names. And I guess that's one niggling point, right? The macros, to some extent, the margin is slightly turning negative for India with crude at $90. So that is something to track going forward. But from a positioning point of view, it looks like the momentum can continue. And today, for a change, it's led by financials, and that's been the big change for the last 2 days. That financials are well bid by large institutions.
Well, that's right. And the Nifty Bank is at 48,000 odd. So now we're just 1.5% away from fresh all-time highs. But Nimesh, don't remind me about the results season.
Anyway. And this is going to go until May end, right?
Yeah, so it's a long one. For me, it'll be my 50th earnings season. So quite a long one. But tell us, Nimesh, what are the individual stocks?
Okay, so in terms of individual names, the first stock on my list is Protein E-Govern, a recent listing that's been buzzing for the last couple of days. I understand some bit of HNI interest is back, but do watch out for a large block deal as well. That can come very soon in that particular stock. So that's the first name. The second stock is Exide. That's been buzzing for the couple of days. Some good buying from larger HNIs is what I understand. And looks like the lithium battery plan is pretty much on track, and hence some bit of traction there. The third stock is Pfizer. This is interesting. Been consolidating in a narrow range of late, but within the MNC, this is one stock which is picked up by a leading domestic PMS of late. So that's the reason why you're seeing delivery volumes there. And the last one is Aavas Financiers. There were multiple block deals in today's trade. I understand a leading long only fund was a seller. So even there, the disclosures could be quite interesting in Aavas Financiers.
Okay, thank you very much, Nimesh, for that interesting list as always. Mitesh is back with us for a few BTST calls or reverse trades. Mitesh, a bit of a sell-off in the mid-cap space. The mid-cap index is now in the red. What would your trades be?
So I think, it's a kind of mixed bag as the markets, but one thing is very clear is that the banking and the financial names are showing more strength. So be long over there. That about, I think, a couple of IT names are reversing. So I have BTST on LTIM with a stop bid of 4,900. And look for a target of around 4,970, 4,980, maybe even higher for tomorrow. And the other one which I like, that's Hero Motors on the sell side. So we'll take one STBT as well. Keep a stop above levels of 45, 45 here. Target of 40, 490, 4485 can happen.
Right, Mitesh, thanks very much for that. So those are sort of near-term trading ideas. Avenue Supermarts is the other one which is rallying today after reporting robust business update. Mangalam is here with more details. Mangalam.
Well, for Dmart this time around, it's been a good update. The revenues for the company have grown by about 20%, 19.8% on a standalone basis, to be precise. What's also important is that this is higher than the 4-year compounded average growth of close to around 14%. And add to that, it implies that there is a high single to low double-digit sort of same-store sales growth as well, because in the same period year-on-year, the store expansion has been around 12.6% as well. And speaking about store additions as well, the fourth quarter is when you see the company typically report the highest number of store openings. And this time around, they've done close to 24 store openings, which is higher than even what the most part of the street was anticipating. And it's gone past their guidance of 40 stores this year by opening 41 stores. What needs to be seen, however, for Dmart is what is the operational revenue mix right now. Has FMCG or non-FMCG assortment come back to its pre-COVID levels? Because that will give you a peek into how margins are likely to be. And we'll also have to see the scale up of Dmart Ready. The stock had been an underperformer over the last 3 years, but over the last month or so, it's done extremely well. A couple of brokerages pretty bullish on Dmart as well.
Okay, all right, got that. Mangalam, so that's Dmart. Let's also talk about Dabur. Any sign, any suggestion here that things are improving on the volume front?
Well, no signs or no suggestions of improvement, and which is what explains a 5% downtick that we've seen on Dabur as soon as the numbers, or ever since the numbers or the quarterly update has come by. There is consumer sluggishness. In fact, there's no respite from that. The company said that they will report mid-single-digit overall growth. Yes, there was some recovery in rural as there were price rollbacks that the company did, and the gap between urban and rural is narrowing. Is it still out of the woods? Not sure. They're awaiting, monsoon and some more sowing data to come by for them to actually say that there are visible green shoots. What has done well for them is home and personal care, which has grown in high single digits, and that's largely a positive. But the other negatives, it's offset by the negatives that we saw in their F&B business, which on the back of a high base is going to report low single-digit growth, and also their healthcare business, which, of course, because of the delayed winter, will not do too well. Healthcare comprises a lot of their Chyawanprash products as well. The international business for them, largely doing well, double-digit constant currency growth, but out there, currency devaluation has played some sort of party pooper, and which is why we'll see an impact of that in their Egyptian business and some of their Middle Eastern businesses as well. Importantly, the margins of the company will expand, and that's something that everyone in the FMCG space was expecting. The only thing to watch out for is revenue growth, and that unfortunately hasn't come by.
Yeah, absolutely. I think that's the pivot. The market's also waiting for. Margins are fine, commodity costs fall, you have operational efficiencies, and margins have been good for these companies. The issue is volume growth. Thanks for that, Mangalam. Well, let's welcome in our next guest on the show. We have Sudeep Bandopadhyay joining in, and let's take both of these stocks actually one by one with Sudeep. Sudeep, good to have you on as always. Let's start with Dabur. I mean, the disappointment is really telling, and it's visible on the screen. But what would you say? I mean, there are also market wizards who say you buy great businesses when, you're in a down cycle. But I don't know, does that hold here? Would you take that approach?
Well, Surabhi, I've been positive on Dabur, and hoping that the rural consumption will pick up. But unfortunately, the numbers clearly are showing that is yet to happen. There is definitely pressure, and we'll have to wait for the consumer demand to really come back. Amongst the large FMCG companies, Dabur have the highest exposure to rural India. The number 2 would be HUL, and under the circumstances, with the kind of depressed consumption environment in rural India, they are bound to suffer. We, of course, have to wait for the monsoon and see what kind of monsoon predictions and monsoon is actually happening during the monsoon seasons, forthcoming monsoon seasons, before we can take a conclusive view on the future of Dabur. But to your point, whether we should buy these kind of businesses when they are down, I completely agree with that logic. I think if somebody is bullish on FMCG for the long term, I think this is a great time to buy both Dabur and HUL.
Okay, those are 2 picks coming in, Dabur and HUL. Let me ask you about the other stock again, consumer, not FMCG, but pure FMCG, but Dmart, Avenue Supermarts. This has been a bit of a disappointing play for the last actually several months, several years now. It's underperformed the market. What's your sense? Do you see a bottom?
Subhi, I think we'll have to wait and watch. Dmart gave scorching growth and really rewarded the shareholders for a very, very long time. Now I think what's happening is competition is intensifying, and I'm not talking about competition from Reliance Retail only. The competition is coming from a Zepto, a Blinkit, Instacart, and all these kind of quick delivery players as well. So under these circumstances, we'll have to see how this online business and quick delivery business impacts Dmart, and whether Dmart, their online piece, really picks up to counter or really better some of these newbies. Now, this is all a very, very fluid state. So fundamentally and structurally, I believe that there are a lot of moving pieces as far as Dmart and these kind of brick and mortar retail is concerned. So we'll have to wait and watch and see how things move. Now, the other point I would like to mention is that the margins will be under pressure for a considerable period of time. That's our view. And under the circumstances, it's better to wait and watch, particularly considering the valuation at which some of these stocks are quoting.
Okay, all right. Hi, Sudeep. Good afternoon and good to see you. And I wanted your view on Vedanta. And the news that's coming in is that they have finally started mining in Goa. Just to tell our viewers, the iron ore part of their business is a very small part of their business. And in terms of an SOTP, it's very, very minimum. But it's a sentiment positive because after close to around 7 years, we're seeing that mining is resuming in Goa. The iron ore that comes out of Goa is very, very low quality as well. So that mostly has to be exported. But besides the iron ore piece, Sudeep, how do you view this stock? One of the big underperformers, you don't know what the promoter does next. But if base metals are going to rally, crude oil prices are going to stay elevated, would you give it a look in, or would you say there are other options that rather play the other?
No, definitely, Nigel, I'll give it a look in. In fact, for the last couple of months, I've been talking about Vedanta, and I've been mentioning that if you are a bit aggressive investor, please go and buy Vedanta. The logic is absolutely what you outlined. We don't know what the promoter will do, and there are a lot of uncertainties as far as governance and other issues are concerned. But structurally, I think the entire metal pack and where Vedanta has a significant presence, they are in metals in a big way. And with what is happening in China, what is going to happen as far as the interest rates in US are concerned, does support the metals rally. And that definitely benefits Vedanta. And the kind of spread of metals they have, nobody else has. So Vedanta and the valuation at which it is quoting also is not exorbitant and can definitely be looked into and bought in for a bit of a aggressive point of view.
Okay, all right, Sudeep, we'll just come back to you. Tomorrow, of course, it's all going to be the RBI, right, which we'll watch out for. We'll hear the governor on a variety of issues, not just the policy. I mean, there are a couple of other things as well. This will be the first time that we'll hear from the governor, and of course the opportunity to ask questions since all those actions were taken on names, companies like IIFL and the gold loan front, and there was of course JM Financial, etc. as well. So apart from the policy, there is a few other things which will be on the radar. But from the policy itself, what is the expectation? My colleague Ritu is here to bring us exactly that. CNBC TV18's poll with regards to the RBI policy. Ritu.
Don't expect any changes in rates or stance just yet, but watch out for the macro forecasts with a potential GDP growth upgrade on the cards, according to a CNBC TV18 poll. There's also an expectation that RBI is going to signal that it will keep liquidity comfortable. Now, if all of this comes true, it is going to be bullish for stocks. 60% of our respondents said that they are going to focus on RBI's growth and inflation projection, with others highlighting that they're going to watch out for any signal that the stance could be shifted towards neutral, or if the tone turns a bit more hawkish given the exuberance in the system which RBI has been highlighting. No one is expecting rates to be tinkered with in this policy. In fact, most of our respondents are also expecting the stance of the policy to be left unchanged at withdrawal of accommodation, with just about 10% expecting that RBI will prepare the markets for a shift in stance going ahead. The first rate cut is only expected in the October policy later this year by most of the respondents, with some expecting it by August, but no earlier than that. On the liquidity front, the respondents largely expect RBI to signal comfortable liquidity. Now, since the last policy, liquidity conditions have eased and RBI has been actively managing liquidity with multiple interventions at both ends, and participants expect that RBI will continue with this and also reiterate its preference to stay nimble with market operations. The inflation forecast for the current fiscal is also unlikely to be changed just yet. Now, while vegetable prices continue to remain volatile, the RBI could find some comfort in the softening core inflation. But on the growth front, half of the respondents are expecting an upward revision, with the domestic growth data remaining robust. The RBI is expected to raise the GDP growth forecast for FY25 anywhere between 7.1 to 7.5%. As per 50% of our respondents, the other half are expecting it to be left unchanged. As to how the governor will sound, absolutely even is the broad consensus. So rates on hold, stance unchanged, some tinkering in the macro projections are the expectations that we are going into this policy with. Of course, the governor's comments in the press conference later about recent regulatory measures, for instance, against financial entities, the larger message from those are also things that we are going to keenly watch out for.
Ritu, thank you very much for that. We'll get into a break. We'll come back with more on the market.
Welcome back. It's still a century on the Nifty. That's doing well. The Nifty Bank is 500 points high and holding strong. Well, let's get you some market opinion that we got earlier today. We spoke to Mr. Dheeraj Agarwal, the Managing Director at Ambit Investment Managers, to discuss his outlook on the markets as well as his top sector bets. Let's listen in to what he had to tell us.
Two things are helping the market sentiment in the near term. There is a clear dovish tilt by the Fed in the March 20th meeting. Now, although they keep on going a little bit back and forth in the subsequent statements, but I think on the whole the tilt is dovish. And second, our strategist was telling us that most 2 months or 3 months going into elections, the markets have been strong. Optimism is building up that number of unfinished agendas of the last term could get completed in the next term, etc. This always happens. So yeah, we could see a near-term bit of a move. Medium term, I think the markets will continue to be choppy. Consumption weakness, which started with only rural weakness a quarter or 2 quarters ago, now seems to be percolating upwards even to the urban products and demand. That's a little bit of a worry. Two-wheeler theme I liked, but from the current prices and the current valuations, I'm slightly more cautious. The stocks have done phenomenal run. For example, Bajaj has done almost 50% kind of a run over the last 5 or 6 months. Hero has done beautifully. So has TVS. I think in terms of sectors and specific push with respect to either the capex plan or PLI, the government has already done a fantastic job. Some structural changes on the agriculture side, which was also tabled and pulled back in the previous term. I hope some of it comes back because it's time we do touch some of these holy cows in the country, and same for land acquisition. So the next big thrust India requires is manufacturing.
Okay, that's the view from Dheeraj. By the way, Divi's Laboratory has been moving up for 5 consecutive days in a row. And this week, the stock has seen a rally of nearly about 9%. Earlier, we had a Bank of America upgrade on Divi's Laboratory. I think it came about 2 days back, but it's been 5 consecutive days of gains where they raised the target price to 4,025, and they believe that the 2-year earnings downgrade cycle for Divi's Laboratory has come to an end. The stock has underperformed, but now it's time to look at Divi's Laboratory, which is why they have a buy call. Sudeep, in the pharma pack, Divi's Laboratory?
Well, I think definitely there is a merit in looking at some of these stocks which were beaten down significantly. As far as overall pharma is concerned, my view remains that the pricing pressure on generics in US is real, and that hasn't yet disappeared. Indian pharma companies which are predominantly selling in US, they will continue to face pricing headwinds. So while they're doing quite well, whether it's a Sun, whether it's a Dr. Reddy's, and the likes Lupin, they are doing well. They are improved efficiencies. They have done a whole lot of cost cutting. But in spite of that, I think the good old days of pharma are not yet back. We'll have to wait and watch. I will still prefer India-focused pharma companies, that is, companies which are predominantly focused on India. Mankind Pharma continues to be a favorite of ours, with about 95-98% of their sales being in India. Torrent Pharma is a favorite stock, and I think some of these stocks needs to be looked at even at current levels.
Okay, by the way, today will go down as extremely, good for a lot of small finance bank stocks. Been making that point. Ujjivan 6.5% up. Suryodaya Small Finance Bank about 12% higher. There is AU Small Finance Bank about 2-3% higher as well. So finally, not sure if it's the update, something else, excitement ahead of the policy, whatever it is, but a big move on a lot of these small lenders. Would you look at a small finance bank stock right now? And if yes, which one?
And I think, a lot of these small finance banks still have a significant part of their portfolio on microfinance assets. And I think the overall microfinance as a sector has been doing very well. The COVID-related, write-offs and the challenges in the portfolio is a thing of the past. The demand is extremely strong. And the other side of the balance sheet, which is deposit mobilization, has improved significantly. So under the circumstances, both the sides of the balance sheet for these small finance banks, predominantly, having microfinance assets, are working very well. AU Finance is, of course, in a different league. Other than AU Finance, the other small finance bank, both the sides of the balance sheets have been performing well, and that has led to this kind of a upward movement is what my belief is.
By the way, Sudeep, I think we did discuss, did we talk about ABFRL a couple of days back?
We did discuss ABFRL. And I'm positive, Prashant, on this demerger because Madura brands were not getting their dues. So segregating the company will ensure that the Madura brands gets valued separately. And the sum of parts is obviously going to be significantly higher than what ABFRL was doing.
I mean, the group itself, in a way, is coming back, right? In a way, Vodafone Idea, there is AB Capital, some of these underperforming businesses, and of course, I mean, the cement businesses, etc., they're market leaders. But there's enough underperformance there, which is starting to get corrected.
Absolutely right. And look at Grasim, what happened with the paints launch. I think they started with the paints launch. Of course, Ultratech continues to be a leader, and also my favorite in the cement space. That definitely is worthwhile looking at Ultratech even at current levels. As far as AB Capital is concerned, I think again that's a good buy. If you buy AB Capital or remain invested in AB Capital, you're participating in almost the entire spectrum of financial services, whether it's an asset management, whether it's life insurance, whether it's health insurance, whether it's a lending piece. So I think it's with financialization of savings happening at a rapid pace, I think they are in a good wicket and definitely can be looked at. ABFRL, of course, the demerger is a step in the right direction. People used to compare with Trent, but look at Trent, where Trent is and where ABFRL is. But with this demerger, I think they will start getting a much better valuation as a combined, two businesses combined.
No, good points, Sudeep. We're not suggesting that, but the mind goes there when you think about what's happened with, say, for example, the Mahindra Group, so many listed entities, and many of them have seen a re-rated. Tata Group before that, and of course, there is a bit of a turn happening in some of these specific businesses for the Aditya Birla Group as well. Sudeep, great to have you with us here. Appreciate your time, and thanks very much for joining us. We'll end 100 points higher. We'll end at 22,545. Which I think is where we opened, approximately where we opened. So there was a 50-point sell-off from 230 to about 315, but I think we've made up for most of it. We had gone down to about 22,500, but right back there. The high is 22,620, and we'll end about 60, 70 points off the day's highest level. So it's a very large bar. Last 2 days we've not had that. Last 2 days sharp intraday recoveries and then absolutely flat closes. But today we end with a 0.5% higher close. So 22,545. Rima.
Well, HDFC Bank is the top gainer, 3% higher on that. And if you pull up the contribution plate, out of the 108-point Nifty gain, HDFC Bank is contributing about 80 points. So 70% of the Nifty up move is courtesy HDFC Bank. And other than that, IT led from the front. The Nifty IT index up 1.5% with names like Tech Mahindra, LTI, Mindtree, TCS gaining smartly.
Well, that was a large cap picture. On the mid-cap screen, the index is not telling you the story. Index is absolutely flat. That is the mid-cap. If I look at the small cap index, then the small cap index has managed about a 0.5% increase. But then let's come to the movers and shakers. Like we were saying, a lot of the BFSI names, because of the quarterly updates coming through, they've done well today. Suryoday Small Finance Bank, 11% higher. Ujjivan Small Finance Bank, 6.5% higher. There is also AU Small, which is about 2.5% higher. KC International order win coming through that worked well for the stock, 5.5% up. Angel One, we should remember, Angel One, the numbers for the month gone by don't look too great in terms of client addition, and the stock sold off 4.5% on the downside. But otherwise, decent day for mid-caps with positive advanced decline ratio. Well, with that, it's a wrap on this edition of Closing Bell. Many thanks for being with us, but don't go anywhere. All the action continues. Up next is Markets Forward.